Welcome back, everybody, to another Sunday video. Today we are taking a look at the market for the week ahead and going to be talking about some trade setups and ideas. And I wanted to start with a pair that I actually have a position open on. This is my Oanda account, and I'm currently long on USDJPY going into this week. I wanted to talk about my analysis on this pair, as a couple other USD pairs will be in focus and kind of interest. So we'll talk about this one first. We'll take a look at the daily chart here. So my thoughts with the dollar are going to definitely be reflected on my UJ entry here, which, by the way, ended up being kind of a really nice entry. You can see on the daily chart, it looks really, really pretty. But price pulled back to a level that I liked on UJ. So if you're watching USDJPY going into this week as well, what I saw and what I kind of liked was this area of consolidation, and you can kind of see a beautiful pin bar previously off of this level. What was kind of there and present before we rallied like crazy into this recent push into the new year. We saw January 4th. I keep mentioning this candle being a huge blowout top for USDJPY before pulling back. And my thoughts on the dollar going into this week, I could be wrong about this, but obviously I took a buy position, so I think that there is potential for this thing to kind of continue up, and that's my thought with all of USD pairs for the time being, right? Thinking that things like USD CAD, USD CHF, USD JPY have some upward potential, especially after that quick downtrend. I think that the buyers for the dollar could be right around the corner. So my thoughts here with USD JPY is we are in a trending market to the upside. You can kind of see overall the moving average is looking pretty good, showing signs of continuation. And I decided to pick up that long position, and I shared that within the private group earlier on this week. Now, if you're not already in the group, here is the trade. So every trade that I take, I share the entry, stop loss order, target, etc., the trade analysis, fundamental analysis. I try and make it so it's not like a signal service. It's not here to just send you like, oh, just do this and don't think about it, right? We're not big fans of that. We talk about it in a real context in terms of, you know, what real traders are doing. You can see, for example, what Patrick is doing. He's a trader from Germany. Annie is a trader from the UK, sharing his thoughts. And then we have Ivan, who is starting up now on the trade alert side of things as well. Some of you guys know Ivan. He's actually going to be substituting on the channel on the live streams this week. But anyways, we are doing this is actually going to be the last week that you can get access to the New Year's sale. There's 22% off of the Discord if you would like to join it, down below in the description. So again, you get to see every trade that I take and why. And my idea here being fundamentally, I took this trade as it tested support, but fundamentally also, I like the idea of that USD weakness that we were seeing last week potentially being a short-term thing. I don't know that it is going to massively continue down in the short term, although we had a little bit of fear around inflation. I do think that the Fed still has a plan, and if they're able to stick to that plan, we should likely see the dollar continue to appreciate. Of course, I could be wrong about this, and that's why I have a stop loss on the trade. I am filming this trade, so hopefully you'll be able to see this on the channel at some point or another. But my thoughts with USDJPY is I do think that we have potential to kind of just meander our way back up and to continue that yen weakness that we have seen for several weeks. We'll take a look now at EURUSD, which is going to be our next pair. So euro dollar did get a little bit of a sell-off there on Friday. We're taking a look at the daily chart. Let's look at the 4-hour chart for just a moment. I would be cautious if you are a seller because we did have, let's give some respect to the name, to the credit of the bears here. What was this huge area of resistance? Some of you guys may have remembered the trades that I took around here and here. I was short bias on the euro, looking for that breakout. Fortunately, I covered my position here before NFP. NFP spiked to the upside, and then we saw some follow through here recently off of that US dollar pressure that came on. Now, as we retest that same area, even though I am kind of bearish on this pair, I'm being cautious because this is a beautiful technical breakout and retest. So if you're looking at the EURUSD and you have an interest in buying it, you know, of course, as always, do your own due diligence and homework. But this area looks interesting going into next week, 1.1380 to 1.1360, which is, again, a big recent area of resistance now broken out and being retested as support. So we have to give credit to the bulls where they're at. Short term, let's take a look at the 20 moving average. We did pull back. What about the 50? The 50 still looking like we're trying to trend higher on the lower time frames here on the 4-hour chart. So giving respect to the euro dollar, I will say this. I think that if euro dollar continues to trend higher. I do have levels in mind that I talked about previously this week on this pair for potential longer term shorts. So for example, I really like 1.1550. That is my kind of target or ideal short position for euro dollar. Unfortunately for me, there was never a chance for me to get into that. But fortunately, like I said, I took that USDJPY trade. So I was still able to expose my account to USD long bias this week at a good entry. And so that's all good, or last week, I should say. So as we go up to euro dollar, if price is able to rally here and start to get a little bit of a boost, that could be great for the day traders or short-term traders who are looking to go long on euro dollar. And for me as a longer-term swing trader, my idea being, this thing is in a downtrend on the higher time frames. So a pullback to that level could give me that nice short premium where I can see myself taking some good risk-reward trades. For example, shorting up here and saying, okay, well, if price breaks out of that range, I could stop out. If price, rolls over from there and we start to see a continuation, there could be some great risk to reward. You're talking probably like a 3 or 4 to 1 just in terms of returning back to lows. Now that could take a month to play out, but again, that's a little bit longer term on the swing trade side of things. And with that level in play, I would probably, like I mentioned, be interested in taking a stab at shorting the euro dollar. Let's take a look at pound dollar here now. Pound dollar making a really impressive rally, making a move to the upside and consistently respecting this trend line here to the upside, or this channel. Let's actually do this. I'm going to use a regression line here. So we'll take a regression trend, go bam to bam. And there it is. You can see this thing has just been respecting structure so beautifully, bouncing off of these levels just consistently on the 4-hour chart. So as we pull back, you've got to wonder, are the bulls just going to recharge here and kind of set up for another rally? And again, with the pound strength recently, I wouldn't be surprised. The pound has been very strong. The Bank of England raised rates suddenly. Things are looking suddenly more hawkish for the UK, which tends to cause their currency to kind of grow, right? Especially with the US dollar taking a little bit of a dip, that kind of helped out the case for a bullish GBPUSD. So from a technical analysis and fundamental analysis standpoint, I think the pound has upside. I think it does make sense to potentially look for pullback buys. So if we were to go swing low to swing high here and get our fibs going, right? That 38.2 coming into play maybe this week could be interesting, right? So if we were to see a spike down, maybe a little bit of a pullback there, and you are long bias on the pound dollar, there potentially could be some nice risk reward trades. You're talking about buys with somewhat tight stop losses, right? Because we're thinking about this as just a tight channel. If that breaks out, we probably want to get out of the way in case it were to, do something like this where it breaks out of the channel and then just kind of falls apart. We have seen that happen very many times in the past when it comes to technical analysis. You get this beautiful channel, and when it breaks, you've got to get out of there because it can just kind of break and fall apart and crumble in front of your eyeballs. So we don't want to get in trouble. We just want to keep things, if things want to continue to play nicely here, if we want to continue to see these rallies off of support, then by all means, maybe there's some nice little buys. And depending what happens with the dollar, we'll just have to keep tabs on that for whether or not that could have potential to break out lower. But for now, I would say there's some reasonable, beautiful technical entries there on pound dollar for next week. Of course, as always, do your due diligence and trade carefully. We'll take a look now at Aussie dollar. Now, Aussie dollar got a little bit of a sell-off there last week. Let's look at the daily chart for just a moment. And we talked about this actually on Friday's video. We talked about this level here and the basically the hammer candle, the inverted hammer, this sell bar right there was pretty impressive, right? We saw on that daily chart, we got that big sell-off into this level, and then there really was some beautiful follow-through. Now the question becomes, can we get enough speed here to kind of continue the overall downward trend? So check this out. I'm going to draw a counter trend, right? So this is what we would call a counter trend. So the big trend is if we scroll out to the downside. We've seen the Aussie dollar kind of consistently trade lower, and look at this. So we talked about this on Friday. We tagged this to this 100 MA, right? 100-day simple moving average got tagged and just melted away right after that. So kind of a nice level for sellers. And now the question becomes, as we come down, are we just going to continue to bounce and rally off of this, or are we going to actually get enough steam here to break through? And if we break through, this is probably the next setup, right? So if you have this trend line going on, you need to break out of maybe this area here. Let's be clean and orderly about this. Let's say this is kind of a level in question, right? You've got a level of support in question, and there it is, right? So price, we're saying if it kind of comes down here and breaks out of this counter trend, that could set us up to continue the macro or the big trend, right? And so if that big trend is going to continue, maybe there's opportunities to look for that pullback sell and continuation. So if you are a dollar bull like myself, there may be that opportunity to look for that, especially if stock markets kind of get ugly again, if they get concerned again, that could cause the Australian dollar, which is that higher growth, higher aggressive currency relative to that big safe haven USD, to potentially come down. This pair could see some downside should stock market stuff get a little bit scary again. Speaking of that, we'll just take a quick glance at what happened in the S&P 500 last week. You can see we did kind of, we went all over last week. So last week, here's the daily chart. We shot down lower, we shot back up, and then by the end of the week, kind of traded back down. So you can kind of see the big, if we were to look at this on a weekly bar, what would this look like? It would kind of look like a semi-doji candle, right? Let's go look at the weekly chart, and yeah, there it is, right? It went down, it went up, it went down, right? So in the end, that's kind of just an indecision bar, I would say, which, you know, to be fair, this thing naturally just seems to float up, right? And just naturally over time, stock markets tend to rise. So as we fail to break lower and as sellers don't make much progress, we consistently see the sellers getting beaten here. And what that tells me also is that it seems like there's an appetite for buying these dips still. And until that changes, this is probably, I would say, most likely going to continue to rise. And if that rises, we have certain currency pairs that could suffer, or do well, right? There are certain currencies that do better than others based on stock market momentum, based on the interest of risk people are willing to take. So for example, we could take a look at CAD yen for next week. CAD yen. Why would this have any impact, or how would this have any correlation to the stock market? Well, if the stock market does well, the CAD, when we break out these currencies into their individual components for just a second, CAD yen. The yen is that safe haven, big, fat, old economy, very strong, but very slow and boring. People buy this when they're scared, right? Kind of like gold. It's like that boring metal that people buy as like a safe haven thing. Well, people sell this when things are good. So if we think stock markets are going to rally, the Canadian dollar is much more risky. It's exposed to the price of oil, which tends to go up in optimistic periods of market growth, right? So we could say, well, if I think the markets are going up and I'm looking at this pair and I like it, CAD yen could actually be an excellent opportunity based on, you know, my analysis for potential continuations to the upside there on this pair, right? We're at support or very close to it. If price were to give us one more tag down lower, maybe there's some good entries there on CAD yen with some tight risk to rewards. You're talking, you know, buying this area with a stop loss below structure and looking for that continuation overall of this market, which has been trending nicely recently. We're at that 100 SMA. You can see that 100 SMA came into come into play right there and then just found support immediately. So we'll see if there's follow through there on CAD yen. I do like that pair on the long side for the time being. In fact, I am short biased on the yen pairs in general. Remember, I said I am long on dollar yen. Took 45,000 units long there at support and looking good so far. We'll see if that can continue to play nicely. But yeah, we'll see if the yen can come down a little bit next week or this week, I guess. By the time, the reason I keep messing that up, by the way, I'm actually filming this on Saturday as I'll be out of town on Sunday. So there it is. Well, so the dollar yen, again, we talked about that earlier, so I won't go back onto that too much. Let's talk a little bit about gold here. XAUUSD is our next one. Now, gold is, of course, a very hot topic pair. I actually have a video planned in advance for this week. So if you do like gold, if you want to see more gold stuff, just do me a favor and hit that subscribe button. Also, by the way, just like the video. If you're enjoying my content, it's free to do, and it really does just support what we're trying to do here. I'm working weekends for you guys just to keep you updated on everything that I'm researching. So if you're enjoying this at all, just hit that like button. It really does help. But yeah, so the gold market, I mentioned all last week. We talked about this over and over, that this one's tricky, right? Because inflation concerns are supposedly very real right now, which, I mean, they are. There's justified reason for inflation concerns. 7% year over year is what we got from CPI last week. And 7% inflation in the US, that's high, right? And so why isn't, though, based on that information, why isn't gold trading anywhere near like 2020 highs or 2021 highs? I mean, we have all this inflation fear supposedly, and yet 1830 hasn't even been able to be broken, right? You're talking about serious high inflation, and yet the gold market stays stagnant. Why is that? Well, one argument that I make in the upcoming video is that despite high inflation concerns, there's also high expectations for the Fed to make action against that. So if you're buying gold off of inflation news, you might be just buying it right before the Fed makes big moves, and then you're just looking at a massive sell-off, right? Because if the Fed basically takes a strong stance, if they raise rates, that is going to be very combating to inflation, or at least in theory, based on the Fed economics, right? They're looking to try and combat that, and so if that comes into play, you could see gold come down. So people are probably not overly optimistic about that buy opportunity because of the fact that the Fed is right around the corner looking to do things against it. So again, if you're looking at gold from a technical analysis standpoint, if you think that the Fed is going to fail out or not do a very good job about all this stuff, we might expect a breakout and a retest. So if you're bullish on that, if you think inflation concerns are going to continue to rise, you may look at 1830 and say, okay, I think that's going to break out. I'm looking for that retest buy after we get signs of breaking out and continuation kind of stuff. So there it is. If we're taking a look here now on the flip side, if you think that the Fed is going to get strong on inflation and the dollar should strengthen, which is kind of more my view, we would probably expect to stay in this range for the time being and possibly even reevaluate the idea of breaking out lower in the next couple weeks, next couple months kind of thing. So, gold for me, range bound for a reason right now. I think it's very justified. But if you do start to see breakouts one way or the other, things could, of course, heat up on gold. And gold is one of those things when momentum starts to kick in. Let's go back in time for a second here, way back to 2020. Remember that year? Well, 2020 was an incredibly bullish year for the gold market. And I was actually very bullish at that time on gold, right? With the inflation fears going crazy and the Fed just, kind of dropping rates like crazy and just like everywhere else and printing a ton of money. It made so much sense to be buying gold. And so gold was a massive, massive winner for myself and for, I'm sure, a lot of other traders who were riding that trend. And so, if you think that's going to happen again, that's a possibility. But I just think personally that we've kind of come full circle since the pandemic first started. It caught central banks by surprise. I think they've had a lot of time to prepare and work towards rate hikes and trying to deal with this post-pandemic situation. I guess, I don't know if you would call it post-pandemic. I guess we're still in technically a pandemic, but yeah. That's the point. So gold, that's my thoughts there. Guys, if you are enjoying my channel at all, do me a favor and just subscribe right now. If you're enjoying these videos, hit the like button. Again, like I mentioned earlier, it's free to do and really helpful. If you guys would like to join the Discord, the link is down below in the description. You can see every trade that I take, as well as Patrick, Ennie, and Ivan. We do coaching webinars. We have a chat room available for traders around the world, and we'd love to see some of you guys in there. So use that code. This is going to be your last chance to use the code for 22% off for the new year, 2022. Get it? So use that code, just punch it in on the link down below in the description. You can sign up, enter your Discord username. We'll give you a code and you can get access right away and jump in on all the action. So thank you guys very much for being here today. If you enjoyed this video, do me a favor and just like it, and we'll see you next time.